This is an Interchain.Live and SM Graves Associates collaboration discussing what I like to call Satoshi Ratio. And we got into the start of this conversation a little while back and figured we should go back to the beginning of that conversation and sort of dive in.
I'm really excited because as Ryan and I were talking about, what to watch in 2025 for technology and how it's going to affect the tech sector everywhere, but particularly here in Vermont as part of our Innovato 2 series. This really had me excited, okay? And generally speaking, we should mention to everybody, we're really excited about what the future, the immediate future could hold for crypto and blockchain, and really then about the whole broader economy, right? As we legitimize these technologies on a widespread market perspective. So there it is.
Absolutely. Absolutely. So here we are, Interchain.Live. I'm Ryan Munn. This is Scott Graves. We are talking about the future. And really what we're going to talk about right now is the questions that people should be asking, because that's where it starts, is asking questions, being curious. And frankly, this stuff has been around for long enough that there are lots of people that do know about it to reach out and ask. But just like anything, there's lots of people that have kind of narrow expertise in different areas. I've spent a long time really trying to understand how this applies to a lot of different industries and applications. But getting down to the core of it, what a lot of people get, I guess, a little confused about is they want to believe, because there's a lot of negative hype and PR in the crypto space, that there needs to be some separation between what is crypto and what is blockchain. And the piece that I try to articulate there is that you really can't separate them. If you could separate them, we would have had blockchain 40 years ago. The reason we don't is because it creates transparency and accountability, and that is directly adversarial to corruption and obscurity. And those things do have a place, and they have power in our economy and our society today. And so it required a tokenized incentive to create that mechanism that started to drive this open source technology, this free knowledge available to anybody who chooses to learn it, to actually penetrate the human knowledge base, to penetrate communities all over the world, and to resist the forces that would shut it down or curtail it. China's tried to ban Bitcoin multiple times. They have banned Bitcoin multiple times. They've recently unbanned it. The markets have gone crazy up and down multiple times. But the reason for that is because of the unique position that this technology holds relative to the overall global economy. And that's where it gets kind of interesting. One of the reasons that people believe that this has power is the simple fact that it can't be easily shut down, and we can't even really identify the creator. The creator goes by a pseudonym of Satoshi Nakamoto. And so that pseudonym is the person or group of people who wrote the Bitcoin white paper and produced the first set of software and mined the first Bitcoin. And that individual or group of individuals either has the keys or lost the keys to billions of dollars worth of Bitcoin that are essentially unrecoverable until that individual either releases them or we crack the code with quantum.
And to be clear here for the people that are just trying to keep up,
yep,
the key, if you will, is the blockchain.
No, when
right?
I say key,
no?
When I say key, it is the private key. So yeah, that's a great question. So blockchain is a ledger. That ledger is made up of public addresses and records associated with those public addresses.
IP addresses for those listening who, again, are still trying to keep up, right?
So the addresses are public addresses. They're the string of like 34 characters. It's a random string of characters. And that public address, it's similar to like if a journalist is out in the field somewhere and they want to send an email to their editor and they want to make sure that their editor knows that it's really from them. And maybe they can't get to their own emails. Maybe they're somewhere weird and they have to just spin up an email somewhere and just create an email account so they can send a message to somebody. If they have an established key pair, a private key and public key, right, then what you can do is you could take a message and you could sign that message with your private key, and that creates a hash. This is all cryptography. And that hash, that little string of characters, can then be processed by someone who has the public key, and they can verify that somebody with the private key created that hash. So even if it's coming from some random email that they don't know where it's coming from, if they see a letter that says, hey, this is John Doe out in, Syria, and this is really important information I need to get back to you, and I couldn't get it any other way, this is how they could verify that. This is also how we could actually verify things on paper. Long before computers with less complex algorithms, we could actually do this stuff by hand, and we could create ciphers where there'd be a public and private pair, and you'd be able to confirm the validity of a message based on that algorithm, that calculation.
And it's this basic concept, right?
Yeah.
That makes this form of, if this was in widespread adopted by our economy, this helps to reduce or eliminate, bad players, because you can't get any further if you can't, not break the code, but this is the equivalent of the cipher saying this is an illegitimate message. It did not come from the source that we
trust.
This
is the same tech that we use in our email today. This is the tech that our computers use when they're creating secure connections in a VPN. But the main difference is that when we start talking about blockchain, what we're doing is we're using that cryptography in a shared mechanism with all kinds of different people around the world who are also using those mechanisms, but they're not necessarily connected to each other until there's a block of those messages created. And that's just a list basically of the transactions that a whole bunch of computers that don't know each other have come to a mathematical conclusion that block of data is correct and accurate, and it commits that to the ledger. And every time that happens, the participant gets a reward when they're the one that happened to commit the block finally. So all the computers that are basically keeping this network secure are competing to get the rewards for authorizing a trustworthy block of this list of transactions. And so that list of transactions could be a message. It could be a single unit sent to put a message across, or it can be a lump of tokens that has some value, right? And so this mechanism is secured by computers all around the world, all competing to get their piece of the reward for keeping the network secure. And they're competing in a very fair, open model. And this base mechanism is cross-border, right? You can pretty much within minutes, seconds, have transacted with somebody anywhere in the world, and you can't charge it back. There's no government control can come in and change that. Now, there's still laws, right? If you do something wrong, you still as a person are going to be responsible. Just because a ledger says one thing doesn't mean you don't still owe somebody something, or vice versa.
Conversely, I hate to interrupt you here, but I think it's important again for our listeners. Conversely, in this system of online transaction, we could eliminate things like oligarchs in a rogue state passing money legitimately. In other words, legitimately transacting business in another country, but with money that was illegitimately gotten, if you will, unless they have the blockchain.
That's just it. This is open source technology. So they do have that blockchain, which is why in US dollars and in current markets, everything that I have on the Waves platform is worth practically nothing. It's a Russian-based blockchain network, proof of stake model. But the few $100s worth of tokens that I have in that Waves platform, if I actually go into the Waves decentralized exchange, it looks like I have $40,000, right? That's probably
that's interesting because the players in there are less than legit, right?
Not necessarily less than legit, but they are on the other side of sanctions, most of them, right?
Oh, okay.
Which means my money in their system is worth more. The problem is I don't have a way to actually get that value out in my world. in my world, the value that I have there is only worth about $500
because of
but
the
in
source,
their
because of
world,
that source being, less than transparent.
yeah, I mean, it is, that blockchain is just as transparent, but it is housed in Russia. There are the majority of the players that have been involved in that network, a lot of them Russian, Belarusian, Eastern European, and that's where that Waves network came up. They came up kind of competitive to Ethereum, but went proof of stake immediately. And they did some things similar to Solana, where they made it super easy to launch your own token. They just were a little ahead of the, ahead of that game. And Solana came out at kind of just the right time after the drop of the NFT craze and launched kind of the meme coin craze. And that's still kind of ongoing. It's sort of reaching a bit of a tail. Plus, there's probably going to be some SEC action on some of those. But that's where the different models and the way they work, like, it's open source. So you can just copy, paste, and build your own platform. So early days, Bitcoin was coming up, and one of the first things people did was make some copies with slightly different hashing algorithms and using slightly different monetary policies. So really simply, like Litecoin, that was basically a Bitcoin fork where they created faster transaction time. They created a higher issuance amount, so there's higher token rewards per block. And they also incorporated some merge mining with other currencies, so they've done some interesting things. So Litecoin, it was sort of initially seen almost as like a live test bed for Bitcoin. So like before you'd actually go live with some new piece of code on the Bitcoin network, it might go live on Litecoin. Litecoin also uses a type of mining that's able to leverage the GPU still, and it is so it's not tied to the what's the word I'm looking for? It's not tied to the ASIC mining, so it's not tied to the same kind of chips that are used today for Bitcoin mining, and that's a whole other conversation. But this cryptocurrency stuff that started 15 years ago has actually been part of the economic driver, making our chips better and more efficient, right? Getting better GPUs to be capable of doing the AI compute. We're a little ahead of schedule on AI stuff, actually. If you look back 10 years and look at some of the predictions that were being made about what we'd be able to do with AI, we're ahead of that curve. And part of the reason for that is the drive of GPU compute capabilities and even ASIC design capabilities that came from the cryptocurrency markets.
Yeah, so I hearing you talk, I can readily see how, but because this is an open source phenomenon, it's sort of like, the collective action, either, it's basically rewarding honesty, right?
Yep.
And at the same time, it's also important to note to people that bad behavior is still, the sort of current world of agency oversight and so forth. You're either rewarded for good behavior, or you're still exposed to actions being taken against you if your behavior is not legit, right?
Right. Yep, absolutely. There's a little bit of a Wild West in that it is global, right? So people are supposed to be responsible, but if you get scammed by someone in Nigeria, good luck, right? Chasing it down. Now, personally, I hate admitting this, and it gives me a stomach ache just talking about it, but BitConnect was a scam that people that have been in the industry would be familiar with. And, I lost a good $10,000 there.
Wow.
But they were one that was quite a long time ago, like 2017. They just disappeared, went off the radar, and anything you had in there was just gone. But I kept searching, and I found there was a case brought against them. There was some kind of a settlement found or something, and I ended up getting reimbursed for at least a portion of the total sort of losses that I incurred there.
So the fact that there was legal action taken and that you were entitled to some kind of remuneration on the backside of that legal action, I'm guessing this was a domestic party
No,
that tried to swindle or no?
nope.
It's
They just were
interesting.
very public about everything that they did. Like they had big conferences and were up on stage and rah, 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 we're making everybody rich. And then they just disappeared. So there was enough
Right.
faces in the limelight. There were enough YouTubers that were promoting the thing that also got held accountable, even though they weren't involved with the actual core program. A lot of
Right.
those people that were promoting it very actively ended up getting sued or held accountable in some way. And so somehow that's how they were able to find recourse. There's another
Interesting.
one similar that I've never gotten recourse from that I might still be looking for some kind of action to be taken. And there's plenty of others that there just is no recourse, and there's some that were just like shady, but how could you prove it? Like if it was actually the system, instead of just using blockchain tokens, if the system itself through and through were blockchain, maybe it wouldn't have been so shady. But because I was just using a regular old website to do these things, that's where it gets shady. And so there was one that I know, I used to make leveraged trades. So I could put up, a fraction of a Bitcoin, but be trading a whole Bitcoin. But the problem with that is that you get stopped out on those trades. And what I came to realize was that it almost seemed very conspicuous the way whoever actually ran that platform had all the data, right? So they could go out and they could literally play the market, or if they had a group of people that they could communicate with, the group could play the market effectively to ensure that those trades got stopped out a lot and people lost their money.
Yeah.
And there's no recourse to that. They're still open. They're still doing business. It's the market moving. It's not them. And how are you going to chase down and prove that they shared some insider information to,
that I can see how that can happen. It's still unfortunate, right?
Yeah.
And,
Yeah.
But that kind of a scam based on leveraged trades is as old as really stock markets are. It's not surprising it would have an equivalent in the digital world, right? The format of communication changed, but humans don't. I'm going to make a statement.
It's not a symptom of the technology. That's the key thing that people misconnect, right? People see the crypto scams and they think the scams are from crypto.
Yeah.
The scams don't it's like scams have existed always. It's just that they were in dollars and it was harder to catch people. The reason why we know so much about crypto scams is because to some extent there is this public ledger element. So we're able to go chase it down. And if some bad actor, now say, any bad actor, if they've collected some Bitcoin or some crypto that's on an open blockchain from a scam, they have to liquidate that and turn that into real world value for them to go spend somehow, right?
Yeah.
So that means it needs to hit the real world somewhere. And even if they get away with it for a while, wherever that coin went, it's still on that ledger. It's still being traced. So wherever it turns up, someone can turn around and go, hey, where did you get this coin?
Right.
Great. Okay. Where'd they get this coin?
You can't counterfeit money. You can't take legitimate money that's been marked and get away with it over time. Like in this, I'm sorry, you can get away with it over time. Right. You just launder the money. You rid yourself of the marked bills. This is a stain on that money that lasts forever.
Yes.
Right. So this is an excellent segue into sort of a statement I want to make to jar, to get you to enliven the conversation on this particular point. Well, you and I have been talking ad nauseum for some time about, look, as soon as governments and those who are leading on monetary policy say, look, this is an accepted currency, right? Then, because it's in a variety of different key ways, this is far more secure, right? Certainly more secure than our current world of, these are my words, not anyone else's. I know they're not professional, a hybrid online world of financial transactions, right? Where, people are doing online banking, which is far less secure than the use of blockchain. And
it's electrified paper banking.
It's exactly.
It's not really digital banking. It's electrified paper banking.
And it's about as secure as sending a fax. Sending a fax might even be more secure, frankly. So
I wouldn't go that far, but still, I definitely agree. The point being, these banks, the reason why fraud still exists in the world is because of the way banks work. And your smaller banks, probably less likely, but also more likely to get away with it, right? Because they're off the radar, but they're less likely to do it because they're community banks, small banks, they care about their community.
They have to see their customers. Yeah.
Yeah. Big, huge global banks, some branch somewhere is doing something. That's all happening right now as we speak.
Right.
You know,
yeah.
right?
Precisely. And so let's just talk a little bit about why that's not happening, right? But also, with the incoming regime here in the United States, what kind of consequences simply by Trump entering the White House that we think might this could be an interesting year. I mean, if we don't all die in a conflagration of chaos,
Yeah.
this might actually, interestingly enough, have some other implications on crypto, which, by the way, if ours as the country whose currency still leads, right?
Yep.
Even with whatever's happened politically in our country, as long as the majority of the world's people
Yep.
see the dollar as being more stable than their own currency, people
Yep.
will continue to buy bonds from the United States. People will continue to use our currency. And and our economy continues to go on that. So, but crypto, for all the reasons why we say it's the better way to go, that might happen in the next 2 to 4 years.
Yeah. Well, I mean, there's already I think hundreds of billions of dollars in US dollar value on blockchain in the form of US dollar stablecoins. So those are basically just tokens that are backed by a company that's holding, U.S. Treasury bonds or their cash equivalents to back their stablecoin, and they're collecting some level of, they're getting the returns on those bonds, and they get some fees from, very large, buyers and traders and transactions handling little bits of arbitrage around the world with different exchanges and things like that. So that's a business as it is, and that's the funny thing about how Bitcoin and blockchain have kind of come into this world. Like, think about 2008, 2009, right? Occupy Wall Street, right after the banking crisis, right? So the sort of ethos was independence, Bitcoin against the dollar, and libertarian kind of like utopian, vision of it all. And
which I think, by the way, is partially why some people that are against widespread use of acceptance of crypto,
right?
It's a cultural issue to me, I think, to some extent. And I only say this because I'm politically fairly liberal-minded, open-minded. I more or less believe in capitalism. It is imperfect, but all systems are imperfect. The point is, we're supposed to start with a fundamental system and kind of like constantly be working on improving iterations of it. So I look at this and I say, if governments were to accept, harbor a belief, right, in this as a representation of their money, right, you'll see whatever illegalities you see, right, become that much harder, because now it's an accepted currency. Because ultimately, even with our current money, right, we're off the gold standard and have been since the Nixon administration.
Right.
The only thing that makes our money is a collective belief that it is in fact money versus something that's just paper. Right. So it's like it could take any form. This form is actually more secure. And so why aren't we going with it? So there's power dynamics in play there, right? It's almost like the record industry, rather, 25, 30 years ago when I was in that industry, right? Hey, we control the format and we control when the format changes. And then the kids that invented Napster said, we can't make any money with file sharing. We might as well put it out for free and see what happens. And just blew that all up, right? It's like, how about we just change the format when it makes sense? Because there's an alternative that works. Why can't we just all accept it?
I mean,
talk
that's
to us
the reality.
A little bit about that.
This technology blew up banking. We're just watching it happen in slow motion, right? This technology is banking. It's open source. It's free to the world. Anybody can use it. The continual evolution of the technology is what breeds new efficiencies and scalability. But literally, we don't need banks as we think of them with this technology at play. What banks still have a place.
Well, wait a minute. Hold on. I'm going to stop you there.
Mhm.
Wouldn't that speak to one of the core reasons maybe why this isn't happening? Like
Exactly.
it's the decentralization of something that's making a lot of money for
Right.
people right now.
I mean, if anybody that knows much about the banking industry knows that there's tier 3, tier 2, and tier 1 banks. And if you're not a tier 1 bank, you are at a disadvantage, right? It's kind of the way that works. So this technology, even take people out of the equation, really. If all the tier 3 and tier 2 banks were able to say, hey, this is how we're going to do business, the tier 1 banks would kind of have to play along. They could fight, but at the end of the day, if those banks make this a public conversation and the understanding of why this is important is in the public psyche, then those tier 1 banks don't have a leg to stand on. There's no reason for them to fight against it other than to continue extracting wealth and taking it from the people that they're serving. So that at the end of the day, making a more efficient banking system, like I said, this has been around for 30, 40 years. Like the technology really started to accelerate like 25 years ago. There was stuff happening called hash cash, and there were people doing things like this, but they got shut down or they got killed. There were projects, there was a pilot project, I think Visa, they just shut it down.
Yeah.
This wasn't able to be shut down. And that's what brought it into the forefront. And now what we're looking at is the technology is actually driving the US dollar because, as you said, the US dollar is perceived as stable and perception is everything. That's what took Bitcoin to being worth literally nothing, to being worth a penny, to being worth $1, $10, $1,000, and now $100,000. It just broke over 100,000 again today. And that is because the value was always there. The people running that network believed in that value. And now more people believe in that value. So the tokens that they have, the record, the receipts that they have of the infrastructure that they built and supported without being fully compensated are now worth a lot more than they appeared to be worth at that time.
Yeah, it's a question of the more things change, the more they stay the same. This is just yet another iteration of, in the first place, in order for people to have the correct perspective, we have to divorce the technology from the human behavior, cultural issues in play, right? Not let's be against crypto because there's a bunch of crypto bros and it's a Ponzi scheme. No. The crypto bros, the weirdo billionaires and the Ponzi schemes, that's a human behavior problem.
That's the US dollar.
And on top of it, it's the current system, right? I mean, hello. But
well, there's another point right there. That's why they're so resistant, because this is an educational seed.
Well, because it decentralizes everything. Well, you're not wrong, but it's ultimately about what is it that if you're the people who have not only money but the power, because your money can buy that power. Mm-hmm. You want to do a couple of things. One, you want to keep the status quo going as long as you can. Any stability you're creating is for you. It's not for everybody. Now, if it happens to help everybody, that's great, right? But ultimately, it's your stability that you're most worried about. Mm-hmm. And if there's ever going to be widespread change, the use of a technology, the acceptance of a new form of currency, whatever, right? You're going to control when that happens, and you're going to control how it happens, and you're going to have yourself and your guys prepared for that first, for the change to happen, right? Again, that's getting back to stability, predictability, right? Yep. Which is wealth and power preservation. The way this is going, it's sort of like watching what happened to the record business 30 years ago. It's like, oh, wait a minute. If we don't control this, right? But it's kind of like cat's out of the bag. You know what I mean? You're correct. It's slowly happening.
Yeah,
but
I mean, that's the thing. It was born uncontrollable.
Yeah.
Like, sure, somebody had tracked down Satoshi the first days, or the first 8 miners had tracked him down and shut him down. Sure, they could have stopped it, but really, the code could have just permutated out, gotten into the hands of, say, 100 or 1,000 people, and then been in different jurisdictions and been able to prevent that, right? And that's what ultimately happened. Is it wasn't shut down early enough. It ended up running in jurisdictions all over the world. And now it doesn't matter what one jurisdiction does, just like I said, China banned Bitcoin and crypto and ICOs, and then they eventually banned mining and drove a bunch of that mining out of China. And now it's in the US and it's in other places around the world. And that activity was them trying to control it, and this technology just not being controllable. It's controlled by governance. It's controlled by consensus, right?
Yeah. Yeah.
And so if we want to change it, we can all come to a consensus about how to change it. And that's in the, some of the articles that say, oh, the Bitcoin policies can be changed. Well, they can in theory, but really, why would anybody change them? It is in all of our interests. Just like you said, the wealthy and powerful have that vested interest. Well, us Bitcoin holders and people vested in the Bitcoin industry have that vested interest in maintaining that status quo, which is why if you look back at the politics of Bitcoin, there have been some very, very strong upheavals. There have been hard forks where people have forked the code into completely different coins to try and compete and replace Bitcoin, saying this will be better. Well, things can all be better in different ways, but there's a very
But why create the instability?
Well, it's also, just think about like fractional reserve banking.
Yeah.
Right?
Okay.
They have X amount of dollars, but they're allowed to lend it out, and then it becomes a deposit, and they can lend it out again, and it becomes a deposit, and they can lend it out again. That's kind of what crypto does in the terms that it's open source, right? Bitcoin blows up to a certain point. People have made copies of different ones that have no value yet because nobody sees it yet. But once Bitcoin hits that peak and starts to drop down, people sell their profits as it drops, and then they turn their profits and they reinvest them, maybe some back into Bitcoin when it gets low, but in the meantime, they might invest them in other cryptocurrencies that tend to pop right after Bitcoin's hit its peak because of that ripple effect of, oh, how do I keep making money in some other crypto? And they look for something else. And so there's been that like, oh, where's the next thing? That, where's the next shiny thing to invest in? And so that's been the cycle. Yeah. And that's changing a little bit now, but you can see that in the traditional markets, right? Like if people have a really banner year, right, in the markets, there's a lot more investment that goes into small cap, micro cap stocks. And, some people lose out, but some people win there too. And you see this, ebb and flow in the markets between the more reliable investments and then going into more higher risk investments. And from a crypto trader perspective, Bitcoin is the safe investment, right? Yeah. Whereas to the traditional trader, Bitcoin seems like this super high risk thing.
Well, but within the crypto realm, right?
But within the crypto realm, it is the most reliable, stable, secure. It has the highest trade volume. It's got the most acceptance everywhere, recognition. Fairly easy to work with nowadays too. There's big companies, publicly traded. Coinbase, Kraken's not publicly traded, but that's another big American exchange. So the reality is that barter is legal in America, right? That's all this is. A token is a token is a token, right? So the ability to buy, trade, sell what we own is a very American right. And so this is the rails for that. And the token is what's bringing it to the population. But the technology is also for things like deeds to cars, equity in companies, functional units like railway, subway tokens, or GPU compute tokens, or heck, there could be weight sensors in trash cans that recognize that you're the guy near the trash can that just threw something in there, and you get a couple little points that reflect that, right? We could turn homeless population into the cleaning population, right? Like there's all kinds of ways to think about economics, right? Not the theory of economics, but like freakonomics, right? Like what are the real behavioral theories, the cause and effect? And frankly, that's the exciting thing. I'll bring it to the politics. That's what people are excited about. People in crypto, this is what people don't realize too. Crypto predicted Trump was going to win by 72%. There were people betting hard money on the election and on Polymarket, which wasn't a blockchain or crypto-based platform when it first came into existence, but they adopted crypto when they realized it made total sense for their business model. And Polymarket was predicting Trump around 72% to win. And that was based on the bets from people and it was like an average bet of like $5,000, right? So there's prediction markets, there's risk markets, there's all kinds of places where we can derive real value from crowdsourcing activity and opinions and predictions. And there's also a lot of opportunity to fractionalize and streamline the access to assets and equity and governance. The ability to, part of the reason people don't participate in government is because they don't feel well informed enough. And it's a hassle to go show up and get it done and make all those decisions, right? But the reality is that there's all kinds of little decisions that we could be influencing all the time if we were just on our town app that sent us a notification to vote on something or share our opinion on something consistently and not have to go through Facebook to do it. Like, I hate the fact that my town posts their notifications on Facebook. Like,
right.
Can municipalities not just come up with some like open source, like, we've been doing this stuff for 60 years now, like what, 80 years now? Like, the first computer was built in 1940. Our towns should be using digital technology natively.
Yeah, it's true. I mean, it is ultimately one of the more interesting facets of this is the use of this as a transactional tool that's also in an even more direct and even more immediate way could be, if it's designed to do so, elicit smarter or better behavior amongst people, or in this case, make it easier for municipalities to be more transparent, which, we've talked about ad nauseum on my podcast outside of Innovato2, how do we get more public engagement? Some of that, of course, can be put on the backs of the public, but it's also very much on the backs of people who work within municipal and state government, who frankly, sometimes, many times don't want the complexity of democracy. Well, this is messy and sometimes it's ugly and we don't agree with some people sometimes. Well, right. But even when you feel like people are giving answers at a public comment period that are less than educated, we either, you either encourage the right kind of behavior, which is open and transparent, and you afford people the opportunity to learn. And sometimes sometimes that's annoying, right? In the day-to-day. But we either have that, and we call that democracy in this case, or we say, well, we're not going to tolerate that. But when we do so, we actually create an environment of less democracy. And that, of course, has its consequences as well, right? So before we wrap up, and I let you sort of have the last word, I just want to mention to listeners, we're going to continue to break down aspects of crypto all year. For Ryan and I, it's one of the things that we're really watching, that we're advocating for, that we see potential, right on down to our own, tech environment here in the great state of Vermont, which is what Innovato2 is all about. We should also mention to people, this show is going out on its own, so to speak. It's been a series in 2024 of the Are We Here Yet podcast, but it's its own thing. It's more than good enough and cool enough to be its own podcast. And we're going to be doing it both on YouTube as a live and archived spot, as well as a subsequent audio only podcast for the people who are, in the car, who really shouldn't be watching YouTube while they're driving around, Vermont. Absolutely. Or anywhere really, for that matter. Final thoughts on the conversation.
Yeah, well, so one thing I want to sort of go back a second and say, hey, I'm not trying to disparage all those wealth and power holders out there, because there's a ton of them that have been investing in this industry for a while now. There's lots of really progressive investors in Vermont, and there's a lot of progressive investors and VCs and funds all around the world that are really, they're part of the reason this is happening, right? They're not always on the same side of things. Like, sometimes I feel like they're really just throwing their money at this to, like you said, try to keep their own status quo and just sort of like, let the limelight do its thing. And they don't really care about the consequences sometimes. But I think there are really, really good projects doing really beneficial things for the ecosystem. And, a lot of times people feel like this is new, but, I mentioned Polymarket. The reason why that prediction was so accurate is because there's 52 million Americans estimated that own crypto now. Even if it's just a little bit, that's a big portion of Americans. And I would wager a bet that a crypto owning American is more likely to show up and vote. Right? They're already choosing to bank themselves. They're already choosing self-sovereignty, right? We are almost a decade behind. In 2018, when I was helping get the law passed in Vermont for the blockchain-based LLC, there was a piece in that law that we scraped because we felt it was going to get too much resistance and people weren't going to understand it. And it was the concept of e-residency. The reason that's so frustrating is that concept wasn't new. It was something that we were actually copying from Estonia, who has been doing it since before then. And in Estonia today, you or anybody could become an e-resident of Estonia, and you can perform any action as a business entity or a resident there other than getting married. Everything else. I think there might be one other thing. Like one exact exception, but you can basically do everything.
Go Estonia. Go Estonia. Yeah. Go the most northern of Baltic states. Like what? Right. I never even knew that existed.
Yeah. Well, and it's really interesting too, because, they also happen to have a ton of incentive, right? They've got that corner city that's still like mostly Russian, but their territory, because Russia did a bunch of those things where they like gave land back, but they had a whole bunch of native Russians living there. So it gives them a reason to come back and claim that it's their place. Same thing with that little strip right in between Estonia and, is it Lithuania there?
Latvia, yeah.
Latvia, yeah. Estonia is right in the middle of that, right?
Yeah.
So there's really good reasons for them. They don't have the power brokers of the world. They don't have the BlackRocks of the world. They have a vested interest in raising the bottom line for everybody. Yep. And so they've implemented this technology, and there's no reason why the United States shouldn't. But the other exciting thing is, yes, we have all kinds of unknowns in our federal government right now. And as much as I might not agree with some of the things that are going on there, the reality is I also have faith in people and democracy. And I really think that the more power tries to keep power in the modern world, they're going to lose it, because that is the nature of open source. It is built to serve people, and it grows and it consumes the commercial world over time.
Yeah, I love it. That is a great final statement on this first crypto-centric conversation. I'm really glad we were able to do this.
Awesome. Cool. Well, I will thank everyone who listens. Really appreciate the interest, the studentship, if you will, of being a continuous learner, because none of this is easy. I definitely won't say that. But anybody can learn to empower themselves with just a little bit of knowledge.